What's going on today, YouTube? Hope you guys all had a great day, and this is going to be a continuation of yesterday's video of how to select your own stocks as a beginner. If you didn't see the first part, check out the first part, and we're just gonna get started. But if you're new to my channel, I upload daily stock market information I wish I knew when I first started. Just trying to help you guys out. This is all just pointing out stuff I wish I knew. If you like this kind of content, subscribe to my channel, like, comment below, share it to someone else that could use it, hit that notification bell so you know when I'm uploading videos. So to continue from yesterday, number 3, he looks for great financial health that is always improving. And while we're on Coke, I'll use it for an example. I think he got in at like the 1980s. Don't quote me on that. I'm not sure. It could have even been the 90s. But he could have looked at these charts back then. I don't know if he did. I don't know what he did. Who knows what he did back then? Actually, he says he doesn't even look at the price of a stock. He bases it solely upon their financial reports. So keep that in mind too. He doesn't care he does care what the price is because that's how he values a company. But he doesn't care what it does day to day. He just looks at the financials and figures out if he can invest in this company. If he ever did look at charts, you can see this has been easily going up year after year. Yes, it did fall. But when he first invested, it was always gradually going up. And probably right here. Yeah, I mean, it does happen, but that's like almost an exponential increase from how much it was increasing. So it needed a correction. And now you can see it's going up gradually again. So keep that in mind. Financial health is always improving. So he's probably looking at, are their sales going up year after year? That's how he finds it in the financial reports. Number 4, like Coca-Cola does. It has a monopoly on the product. No one can make it, no one can sell it besides Coca-Cola. This would even go the same as Apple. Like, they have a product. They have the iPhone. They have the MacBook. They have products. They've monopolized it. Like, they are the only ones that can sell these products because they have patents and everything. And if you stay this long, 3 ways you can get in. I'm not recommending this. I'm just telling you 3 ways you can get a product for cheaper, or you can get a share of a company for cheaper than it might actually be valued at. What Warren Buffett sometimes does. Number 1, look to invest in them after a big scandal. 2, after a big loss. Or 3, after bad news that came out. Those 3 things are not making the company lose value. All they're doing is making people drop out of it. Like big scandals, lawsuits, big losses, even big losses for just like market corrections. But they're not making the company lose value. It just might hinder it for a while. And if their sales are not reflected upon it, yes, you could have a scandal and have their sales reflected upon it, and that could really hurt the company for the future. But I'm just saying this is a way to get a stock share of a company for a cheaper value than it is. And I'm going to show you 4 companies that kind of represent this. So we're going to look, first one, we're going to look at Bank of America. These are just off the top of my head that I can think of right now. With this market correction, Bank of America, it had a big drop. So if you reevaluated the price here and you could get it for $3 cheaper than it was selling at before, and you think it was already selling at a low price, it might be a good time to buy. And this was just from a market correction, because when the Dow falls, like everything falls, they all fall. There are some outliers that can keep on going up through like bear markets, but for the majority, they all fall. Ford. You guys can do your due diligence and find out why Ford dropped so drastically from 1348 to 1019. And this was before the market was even correcting. But I'm just saying, if you think Ford is worth more than it's currently trading at, it's like this is just an opportunity to buy. One other one, since we talked about lawsuits. Now, this one's a little tricky. Now, I'm going to explain why. But I was actually watching this stock the whole time. I kind of messed up because I am a technical trader too. And if I was paying more attention, I could have probably caught a very good return off of this. But back in here, when this stock had this first drop, it came out with news that the CEO might be doing something wrong with his, pretty much stealing money from the company. So while the news came out bad, it had a drop because people were getting out thinking, oh my God, the company could go, who knows what could happen with this kind of lawsuit. So it dropped. News came out and confirmed he was taking money from the company. So it fell the whole way from around $9 the whole way down to about $5. Now, it was consolidating nicely at $5. And then it started to spike up again. The reason this had such a large spike is because marijuana stocks, and that's what INSEE is, it's a therapeutic company. And news kind of happened perfectly for this stock, and that's why I say I messed up, because I should have known better that this was going to take a big jump. But all those laws were getting passed as soon as 2017 crossed over for recreational and medical marijuana. So for this being a company, it kind of got into the hype, and it rose the whole way from $5 to $14. And that's a 128% gain if you look at from $6 range when it started showing an uptrend. I'm not saying this is a company that's good or bad, but I just want to show you what can happen with news also. So first step, bad CEO reputation. Confirmed bad CEO reputation. And then it's shot up because the news allowed it to, and every medical and recreational marijuana company shot up at this time. It was a hot sector. And now, if you look, which I expected in a way too, it came right back down to right near where it was trading before. So even before this, it's always been around this price point between 18 and 10. And you can see they give earnings. They have positive earnings right now. They'd had negative for a while. That's probably when the CEO is taking money. Who knows? It's hard to tell sometimes, even if you go through these SEC filings. But if you went through these filings and found out that this is actually a good company and you want to invest in it, it would have been a good time to buy more shares when the news came out about the CEO, because it's cheaper. If companies, just because the CEO was taking money from this company doesn't mean the company lost its value. It doesn't mean the company is not making the same sales as it was, developing the same technology. It is one guy that made this stock drop this much. The last one I want to go over, Tesla. It's kind of the same as Bank of America. Weird thing about this company, not weird, but if you look, it always has negative earnings, but price still keeps on going up because there's so much news around Tesla and everything that he does that people are pretty much investing in the guy himself rather than his company. It's all based off hope that this company is going to go to the moon, basically. But I just want to say, market correction, price dropped all the way to 310, back up to around 340, 350 where it was. So those are just some opportunities of a good time when you can get into a stock if you're looking to invest in it. Sometimes you just need to wait. And right now, I have not invested into single stocks that much, and the whole reason is because we are in such a bull market right now that I feel like a lot of these stocks are just way overpriced for what they're actually worth. So that's why right now I go into index funds. I go into index funds because I can replicate the market. So if I am wrong and this market's going to keep on going up forever, I'm not losing out on gains. Me investing in an index fund can broaden my portfolio as much as possible. So that's why I'm doing what I'm doing right now. And I go after a lot of swing trades right now because I don't want to put my money into a single company right now. I think, like I said, I could be wrong. That's why I am very, very defensive right now and just go into index funds, because I think a lot of these companies are just way overinflated. But that's just my theory. It should not reflect what you do at all. I'm just putting out different ways to think about stuff. So if you like this video, leave a like, comment, share it to someone else that could use it. And if you want more information like this, I upload daily, so subscribe to my channel. And I'll see you guys tomorrow.